Thursday, February 27th, market analysis. Stan Ehrlich, good morning, 9:54 California time. As you guys know, I start out with stock market indexes, the E-mini, etc., and then go to futures markets and occasionally stuff like cycles or a variety of other topics. I haven't done that lately, but I do periodically. Now, we have some oversold conditions in the stock market indexes. The implication is that we are close to a minor low. It could be a very important major low, but it can't tell yet. In price and in time, but sometimes these oversold conditions can last for a week or two or even significantly more, and therefore they're not close in time at all and may not necessarily be close to price either. It's just a warning that if you're oversold, it's probably not a good place to go short and probably a time and price level to be looking for reasons to go long or to get out of shorts. Buying in general, period, one way or the other. So what do we got? We've got an E-mini market this morning on my daily data charts that's yellow. That means it's oversold. Now I'm using my custom RSI. I learned RSI from Wells Wilder himself in the late 70s, 80s, and so on. And I don't use the same overbought, oversold levels, and I don't use the same look back, and I don't plot the data the same way, as you can tell, at all. But I like it. We customized quite a bit. So we are at support, not major, but fairly good. And that was Tuesday. And then Wednesday's low was higher than Tuesday. And today we're a little bit below yesterday's low at one point in time, but we didn't make a new low for this swing down. And that which started basically from the rally high on February 19th. Now, you could call this a triple top. I don't know. They're very rare. I still like to call it a double top, but I'll accept a triple. It doesn't matter. The downside objective is measured from the highest high or the average of the highs. They're all relatively close together, or you can't get away with calling it a double top or a triple, to the lowest low. And that measurement from the average of the highs to the lowest low between the highs is the depth of the formation. And you take that depth of the formation, which is the yellow line I've got right here, and proving to you that that is the measurement from the line down to the low. You drop it the top of the line down, straight down, and I got a minimum downside objective of about 54.50 to round it up a little bit. The breakout point, that's what I want to concentrate here today, is closing or breaking below and staying below the lowest low between all of these highs, usually two, this one has three, on a closing basis, and then you've got a breakout. Now, we are going down some. It's not a lot. It's down about a point at the moment, but we do have a low lower than yesterday, and we're very close to Tuesday's lowest low, which was the lowest low since January 15th, over a month. And the breakout level is not too much lower. Now, under these circumstances, what we're going to see probably is option one, a very sharp, quick break and just crash through the support level and have a very, very big down day. And it could be tomorrow instead of today. We go down some today, 3, 4, 5, 6 points. And then that's SPY points. That's 30, 40, 50, 60, and E-mini. And get much closer to the downside breakout. And on Friday, tomorrow, we do it. Or it could happen in one day, but that again would be a very, very big down day. But it's happened. Let's see, we had a huge down day here on December 18th, only a couple of months ago. I wonder, is that going to be a big enough if we do the same thing? From the high on that day to the low on that day, I just put a measuring stick. I'm going to grab it and swing it over. Oh, yeah, that could do it. That would be if we did the same thing that we did on December 18th. If we did that today, we would be breaking out of this formation now, today. But again, that's a very big break, and it's fairly not that common. Okay. But I am expecting a test at a minimum of 5850 to 5800, a support area. But again, if that support area doesn't hold, then I'm looking for 5450-ish. Yep. Next chart is simply the 5-minute data on the E-mini, and you can see doesn't look like it's bottoming out to me yet. I know we've got a couple of lows here that are interesting, but all the highs are still lower than each other over any modest amount of time, intraday or a day or two. Next chart is Spider, same story, nothing really important to add. The breakout to the downside numbers are similar, except for the decimal point. And the breakout level is still the same day, January 13th. He closed below the low of January 13th. We should be off and running for another significant leg down. Now, one other comment, I am not really long-term bearish, meaning multiple, several months or more, like 6 months or more bearish. This bear move, if it gets to the downside objective of, let's call this for the SPY 542, I don't think it's going to take more than a couple of months. And then the long-term bull market, I think, is going to persist again. Next chart. Not looking real good. Getting close to the lows here. I think they're going to get broken right in here, these lows. Then you've got your major downside breakout, and that's, the date of January 11th. So we're about halfway there. Next, we've got QQQ. We already broke Tuesday's low and are sitting lower than most of the data here from the last couple of days, getting a little bit more oversold and getting closer to the first significant support area, which contains, of course, the previous low, one of the reasons why it's support, but there's other reasons as well. Bunch of highs, same price range historically. So if we close below on the QQQ, let's call it 499, you should be on your way down to 458. Then a new bull market, I hope. But let's see what happens first about the breakouts. And you'll notice the QQQ is much closer to a major breakout. And the QQQ 5-minute chart, I think by the end of the day, maybe the SPY and the ES are going to look the same, making new lows since Tuesday's lows and sliding down some more. Now we've got the NQ NASDAQ futures contract. It also made, like the QQQ, a little bit lower low than Tuesday and is relatively close, pretty damn close to the major downside breakout. Now here I didn't draw in my downside objective yet. Again, I'm going to take about the average. Eyeballing it's good enough. These numbers are not supposed to be super accurate. They just don't work out that way. But as long as you're getting, 95% of the move you're expecting, you're doing pretty damn good. So here's the depth of the formation. And now I'm measuring the downside objective, which for the NQ, 19, let's call it 19,000 flat. Yep, and that's also an interesting support level. Hey, some lows over here in the same ballpark. That low right there is almost exactly the same price level. Yeah, that's not bad. I'll draw in a support area sooner or later. Not important right now. Next, you've got the NQ 5-minute data, and I've stretched it out, push it back together. Down we go. I think the E-mini and the SP charts are going to look like this by the end of the day or soon. Now, the YM is very close on the heels of the NASDAQ, and we're looking at, and that was, the NASDAQ. And here we go. Yesterday, we made a low lower than the bullish engulfing day, which was on Tuesday, and it did not work because you made a lower low. Now, there was a small day trade loss on Tuesday and probably a modest not necessarily that small, loss yesterday on the long position based on the buy signal on Tuesday, and we probably got stopped out on Wednesday on the overnight ER1. The overnight scalp, I meant there's no overnight. The day trade scalp lost a little. The overnight got bumped out with a little bit larger. And I can tell because we made a lower low, and you probably got pushed out of the trade a little higher than the low of Tuesday. Nevertheless, we're flat, and the signal didn't work. Now, we are up on the day a little at the moment. We did not make a lower low. We did make a higher high by a few ticks. Therefore, we don't have an outside trading range. If we get below yesterday's low, we will have an outside trading range. But at that moment, it will be an outside down day because you're making lows lower than yesterday. And that's generally bearish. And that's exactly what I want. I'm not sure I'm going to get it today, but that would not be a surprise. And let's look at the YM 5-minute chart. Yeah, a little stronger than the rest. Barely hanging on to some support down in here. Resistance is stopping it also in general. Next, the Russell is a different animal. We have new lows all the way since September, just in the last few days. This is basically on daily data charts leading the way down. We are oversold now for 5 days in a row in a major support area. We did make a new low by a few ticks for the whole move down, definitely lower than yesterday's low. So if, perchance, we have a higher high and a close above the previous day's high, we will have a bullish engulfing and a buy signal. Obviously, I don't think that's going to happen. I don't expect that to happen. It would be a surprise. But the conditions are correct, but I don't think it's going to happen. Looking for more lows and getting even more oversold. Granted, the oversold condition is pretty damn significant, 15. But the Russell doesn't do exactly the same as the other SPY and the QQQ and the YM. They are pretty much a little bit in a group, especially the Qs and the S&P. The YM sometimes, frequently, frankly, is doing opposite the others. Okay, so looking very bearish, but could bounce. Very oversold, minor support last couple of days, not holding very well so far, down on the day, a chunk. Next, 5-minute data, still trading right here. Looks like it could go lower still. Bonds have made yesterday a new high with a new high close. And finally, on Tuesday, fulfilled the upside objective on the head and shoulder bottom. So that is now come and gone and was a very, very good example of head and shoulders. Two things are not quite perfect, and that would be the initial breakout didn't cause a whopping big move immediately. It happened a week later. And the lows for a few days were a little bit under the neckline, which should be either on it or above it. And even the retest, the reaction back down to the neckline was a little bit below the neckline, but it closed on it. And we never did, once we closed above the neckline, we never closed below the neckline again, even though we dipped down a touch below it a few times. Then finally, upside objective fulfilled. I think we're overbought. I know we're overbought, in my opinion, and we're in a resistance area, and we're coming down a little bit. So I wouldn't be surprised to see this dribble back down to, I don't know, 116. This is a little hard to tell. Maybe a little lower than that, 115, and then up. I am long-term bullish, and I'm talking about the potential of a gigantic 1.5 year double bottom formation. It will not break out of that formation until we get way up to 127 plus, call it 128 almost. Then the double bottom will produce a minimum upside objective in the future, many months away, of 145, like the end of this year, maybe even later than that. But this is a long-term bull market beginning, in my opinion. And the reason for it is the broad 1.5-year double bottom formation. In 10-year notes, we have the exact same thing. No shocker. It's even a better example. The lows that we made here on January 14th were just a little tiny bit below the lows that were made way over here on October 23. And I like it a lot. Now, in just the last few days, we've managed to be a little more convincing about the double bottom, which won't break out to the upside until we finally get way up around 115, almost 116. Then the upside objective after that is going to be way up to 124 and a half or higher. So this formation is a much better looking one. It's very large like the bonds. And I got to mention in bonds, we have a bullish engulfing ER buy signal on January 14th, the exact low day. Also, the first low of the double bottom way back in October of 23, we also have a bullish engulfing ER buy signal on the exact low day. These signals can be extremely profound some of the time. That's why I developed a strategy. Sometimes they don't work, but we have close stops. Definitely close stops, because if they don't work, very strict rules involved and they're right close stops. If they do work, you may have gotten into a position on a major long-term turning point to the exact day. Going back to notes, up against a little resistance, getting overbought, daily data charts. I expect a minor downside correction. Oh, maybe only down to 109, call it 110, and maybe down to 109.04. So a modest dip, taking a few to several days, and then continuing higher. Frankly, it could continue higher right away. It'll just get more and more overbought, and I'll be more and more likely to see a correction. So if I were long, I'd be raising my stops. If I were looking for sell signals, I wouldn't necessarily be going short yet. I don't have a signal, but I'm very interested in doing so. Next chart, crude oil. Rallying today nicely. I can't say a heck of a lot. We came very close to oversold on this last break. Not quite. Very close. So a bounce is not unexpected, but oversold, I'm much more likely to talk about rallies. I don't have a lot to say here. It's a gigantic, big sideways trading range, essentially anywhere from early 2023. Yeah. So most of the tops have been in the ballpark of 80 or a little under, except for one obvious one way up here at 85. Most of the lows have been 56, 59, 61. And here we are at 70. So we're kind of in the middle of a whole big couple of year plus sideways trading range. And no overbought, no oversold, no signals, no reversals. So I guess it could rally a little. That's about the best I can come up with. What about heating oil? Up a chunk today at the moment. Didn't quite get to support. Didn't quite get to oversold, but we're bouncing. So there's another dip, maybe possible. But I think we're trying. And again, I don't have a lot of conviction like crude on my opinion on heating oil at the moment. So I'll shut the heck up. Next. Natural gas, overbought condition, topped out right at the top of the resistance area very nicely. It may not be obvious why they've got resistance there, but now it is. Way back in this time frame, February 23, we started to develop a trading range, and I could drop this down a little bit right here, a minor amount, up about there is better. It's not changing anything. So overbought, top of a resistance area, and probably going to come down a little bit more. Today was almost a new low, maybe the exact same tick, maybe a tick or two higher. And we're around unchanged at the moment. So I'm modestly bearish to maybe down to 3.5. And it's possible it could dribble off a little bit more, but the longer term I think is still up. This head and shoulder bottom worked great. A little bit of a false breakout here for a day or two. The retracement was great. Bad signal at the bottom there. It didn't work. Also a bad signal there. That's bearish, not bullish. Too bad that wasn't green. And we were over, but that didn't happen. Okay, so I'm bullish longer term, but bearish short term because of the overbought and resistance areas. So a little bit more of a dip and then up. Now gold made a new low here for about 2 weeks and made a low lower than the bearish signal day. Now this didn't turn out to be the highest high for the trend up. It did get a little bit higher a few days later, but it did present a very good opportunity. There was a very profitable scalp, ER1 scalp trade on February 14th. But the overnight probably lost a little money, but I'm not sure. We did have a nice big move down below the low of the previous day on the signal day, which is the red day. So that opens it up to profitable trade also for the overnight. But again, I'm not showing that. I do have little green dots there representing the ER1 scalp trade, and that made money, period. So looking for more of a downside correction. I'm thinking minimum 28.52, but that's pretty close. I wouldn't rule out 27.84 and maybe even a little bit lower. Not bearish long term, but a little bit more bearish short term. Next, silver. Same kind of comments. Got up to approximately the resistance area and topped out in overbought conditions and is making minor new lows. So, a little bit bearish short term, but the long-term trend is obviously up here. Very much so. And I usually have at least 3 years of data loaded. Yep, that looks like about 3 years to me. June of 22, 23, 24. Yeah, almost 3 years. So that's good. Bearish a little bit for another couple of weeks. Then turning up, I would expect. Not that close to oversold. So we got some elbow room on the downside. Platinum, same kind of comment, except platinum is super close to oversold, and it is now coming into a support area. So I'm going to think maybe 937.8-ish, and I can't rule out a little bit lower than that. But that would generate an oversold condition, I'm pretty sure. And that would be a nice combination to turn back up. So a little bit lower very soon here, next day or 2 or 3 of trading, and then up again, I think. So gold and silver, platinum and silver for that matter, kind of match. A little bit more correction is possible, but the longer term seems to be likely higher. Copper is not the same, of course. Got the high of the market to the exact day on February 14th. I told you on that day. Sell signal is what I pointed out to you. Sometimes these signals don't develop until after my YouTube on that date because I try to do my YouTubes approximately the middle of the day. So I'm looking for lower levels on copper. Not close to oversold, but a little bit of support. Not too much lower. Next, soybeans are hanging in there, but I'm afraid they're going to make a little bit lower lows. I'm looking for it to turn around soon and start another major move up. I am talking about a double bottom formation, excuse me, with the lowest lows in August, that is August of 24, and the lowest low, of course, December 19th of 24. The breakout almost happened, missing by 2 cents on February 5th. So we get a pullback. And that's okay. I might even say it's okay if we come back to 1023. I don't think, but it's okay if we come back to 998. I don't think that's going to happen. But I do not want it to go below 998. Then you're in jeopardy of killing this formation. or turning into something different. So, looking for a turnaround, looking for a reason to talk bullish on a short-term, intermediate, and, as I have been doing, long-term. Soybean oil, pretty much the same commentary, but soybean oil has a shoulder low around May 3rd of 24. The head of the formation is single day, August 16th of 24, and the last shoulder low on December 26th. We did have a buy signal during that bottom situation, and we had a buy signal during the bottom situation for the head of the formation as well. So what do? We got up, we got overbought, we got in resistance area, and we're pulling back a little. I think maybe only to 44 and a half. Not ruling out 43 and a fraction, but that's probably the lowest. I do think within a few weeks, week or two or three, we're going to get up above 48. Then we're going to be looking at a neckline breakout at around 51, depends upon how long it takes, maybe close to 52. And that generates a head and shoulder bottom neckline breakout with a minimum upside objective of 62 plus. Next chart. Meal hit the support area 2 days ago, Tuesday. Down on the day a little bit at the moment, but right nestled against a little bit of support level here for the last couple, 3 weeks. Is it going to hold? I think there's a fair chance, but I'm not doing anything yet. If it starts to make closing prices above 306, I would be interested in going long. Or if I get some kind of great buy signal in the meantime, otherwise it could break down. I'm not oversold, not even that close. We're super close to making new lows for an extended period of time. And I'm just hoping that this doesn't happen because I've got this big support area, which has held up pretty well ever since those lows in June of 23, almost 2 years ago. Next, corn. Minor new low for about a month and a half. Oversold today. First time ever since October. That's the last time this was oversold. We had a bullish engulfing buy signal on the low day, on the last shoulder low before that big bull move, a buy signal around 426, and it went up to 512, approximately 13, 14, 15. That is a hell of a signal. Now, they don't always turn out to be that good. I think it's about to bottom out. I think it could go a little lower into the support range. I wouldn't be buying it yet. Head and shoulder bottom did work, past tense, and all I've got now is a long-term bull trend. I don't see anything else I can scream about. Okay, I do. There's a chance, and I am probably too many days or weeks and a little bit too far away price-wise. Well, frankly, the prices aren't that bad. You know, ladies and gentlemen, I'm going to have to do this real quick. This could be a shoulder low, and if that's true, then the distance from the shoulder low to the head of the formation is this distance, time-wise. And that timing point to the future is, oh my God, it's right now, right today. Oh, this changes the situation a lot. What do you think if it did turn around today, in a few days? This pattern is almost exactly 1 full year. That's pretty big. The symmetry is almost exactly perfect, timing-wise. The first shoulder low was a price level of about 471. So we could get down there, and we're at 80, not too far away. 82. So in the next day or two or three or four or five or six or a week or something, I'll allow, even up to maybe a month at the most. The timing is rarely as accurate at this as especially since the pattern is a full year in size. I didn't see that until just now when I looked at a couple of years worth of history. I think this could be very soon developing a possible last shoulder. The neckline's great. The neckline's across this high right here and that high right there, of course. Wow. I'm not even going to measure the upside objective. Not important at the moment, but it's huge. I'm going to say 650 in that wide, broad price range by up or down 20, 30 cents higher or lower than 650, but way up there. Next chart, wheat. Now, I can't make the same story here. The measurements for the timing are way off. I'd need another, looks like 2 or 3 months for the timing to be pretty much similar. Wow. Okay. So the neckline would slant down. We're just missing the timing. Price levels are okay. We're coming close to the shoulder low, the first shoulder low. So maybe we'll bounce some, and maybe it will take a while until the finally bottoms out. And the timing point for this, and I'll measure it again just like I did on the corn, would be this time frame. Whoops, I got a little bit short. Doesn't matter too much, a couple weeks. And now it's been a little more accurate. Wow, I would need all the way until late May. A lot longer, 3 months. 3 months from now. So that's probably not going to happen. All I'm looking at is an oversold condition, low and last, and some significant support area that we're approaching. Next, cattle. Can't say much. Long-term trend, almost got to support. Looks like it's trying to turn around, but not particularly aggressively. I don't know. I don't have a real good, strong feel for this at the moment. Miss Piggy, new lows by a whole big chunk. Low and last, looking for a move down, probably to the bottom of this trading support area, that is. We're getting very close to oversold. So I think we're approaching a turning point back up, but not yet, and a little lower, maybe down to about 81. Now, XYZ bouncing, got extremely oversold. Very, very few daily data charts reach a 6 on the RSI level. So last time we were down that low was almost never. Wow, look at this. Is that a 6? Yep. Okay, that's 9, 7, close enough. That was September of 23, over a year and a half ago, about a year and a half ago. That's how rare these extreme low RSIs are. And I don't see another one. Yeah, I do. Oh my God. Down here, 6, 7, and a bullish engulfing involved in that bottoming out process. So they're very rare. Let's call it one a year, or maybe less often than that. And they almost always are right close to, in price and time, an upside turn. And that's what we're getting starting as of yesterday on XYZ. There's a gap to close. I'm looking for at least 81.66. And then maybe a lot higher longer term. E-mini again. Let's look to see what's happening here on a fine-tuned chart. This is the 5-minute rallying fairly back up to about unchanged. You guys have a great day and profitable trading to you.